Hello everyone, welcome back to Just Invest Today. In today's video, we're talking about JD.com's earnings from last week. It was just released. It grew 4% top line revenue growth, which is amazing because if you understand the backdrop of China and what was happening, there's a lot of deflation and prices going down and not a lot of economic activity. For them to grow this quarter is amazing. You have them announcing more dividends. You have them also announcing buybacks. So they're going to reduce the market cap by like 7 to 9%, which is insane. So we have a lot of positive coming from JD.com. This is just the tip of the iceberg because there was a lot of positive from their earnings call we really got to get into. So before we get into this video, like and subscribe to my channel. I'm always providing you guys with so much new content. Click that like button, click that subscribe button right now. If you haven't been living under a rock, JD.com is one of the biggest e-commerce players in China. It goes hand in hand with Baba and JD.com. You think about this business, it's more like Amazon because it actually buys the products and holds its own products, has its own branded products as well. So it's actually more similar to Amazon.com than Baba is similar to Amazon.com. So think about JD.com in that way. And when you really break down JD.com and its advantages, its biggest advantage when it comes to e-commerce is its logistics network. It's so vast, it's so spread out. 95% of its products is same day delivery or next day delivery, which is insane, man. This is what separates JD.com from Baba or PDD. It's its delivery services, the high quality of the business and its products. It's more for people that want quality and good service. So this is what JD.com is known for, which is amazing moat to have, especially when service is getting better and better and better. So with that kind of advantage, it makes it so easy to hold on to JD.com's shares for a very, very long time. For JD's report Q4, revenue growth 3.6%, free cash flow of 5.7 billion, up 14%, a 60% free cash flow yield, a $3 billion buyback, 9% of the market cap, a $1.2 billion dividend, $27 billion of cash and investments versus a $34 billion market cap. Look how solid the company's financials are and how they're like giving back to the shareholders. And I love that, man. The management team is doing what we're asking it to do. They're buying back more shares and they're increasing their dividend. Like, what more can you ask for as JD.com shareholders? Maybe a bigger buyback, but that can come over time as they see the profits increasing, especially when the whole kind of market for China is going to get better, especially with Xi Jinping actually providing more stimulus for the economy. So what's going to happen when the stimulus actually hits the economy and we can see prices kind of get back to where they were previously? And when you look at JD.com's stock price, the fundamentals just don't match what's happening with the stock price. In the last 5 years, the stock is down 6%. But if you look at the fundamentals of JD.com in the last 5 years, it's telling a completely different story. Sometimes the market does not give you an accurate point of view of what's really happening with the company. In the last 5 years, from 2019 to 2023, the revenue has increased 86%, EPS up 183%, EBITDA up 322%. You can see these results and be like, damn, why is the stock price down? This is all from multiple compression, people not liking China and Taiwan. But this is amazing if you're a true shareholder of JD.com because it's giving us cheaper prices for the company to buy back the stock and also for us to keep buying the shares of this company as it keeps performing. So we can ignore all the news. It doesn't matter because if you truly believe in investing and you truly believe that the stock prices will follow the earnings overall, the stock price will follow the fundamentals of the company eventually. The earnings growth will follow the company's stock price eventually. I'm not sure it's going to be in 2 years, 3 years, 5 years, 10 years, but it doesn't matter. It's going to follow where the earnings are growing eventually. When we look at the earnings call for JD.com, we can see all positive. We just need to look at a few business metrics to see if JD.com is still a solid company. Like if the users are growing, they're selling more products at better prices, if they're actually going about the business the correct way. We can kind of sit back and do nothing. As long as the business is growing and our thesis still stands that JD.com is going to participate into the future growth of China. Let's go into the earnings call of JD.com. First, user engagement. In Q4, we saw a number of costly active consumers accelerate at a level The growth was at an even faster pace in Q4, particularly in new users. We are excited to see our user momentum pick up in Q1. User behavior also trended better. For example, user shopping frequency on JD continues to rise both in Q4 and the full year. This increase was particularly driven by growth of our loyal existing users and Plus members. Growth also translated to a robust order volume growth, hitting double-digit year-on-year in Q4 and accelerating for 3 consecutive quarters. So this is what I'm saying, where the business results are showing it for itself. The users are growing and increasing GMV and purchase frequency. And another thing we can look at when it comes to JD.com is they're getting more into 3P, but that is just a very early process. It was down this quarter, but they're seeing a lot of user growth and a lot of purchase frequency, and they're not gonna get into monetizing that right away. They're gonna wait a little bit, almost like Amazon and how a lot of people can advertise their product on Amazon. JD.com is starting to do that same thing. The momentum is picking up. They're not monetizing that yet, but we can kind of see maybe next year or in later years. So that's when you have to think about the future and its growth. And that just shows you the big picture of JD.com and how they still have a lot of potential to grow. And you can kind of see their international expansion as well, as they're looking to expand internationally. I'm not sure how they're going to do that, or if it's an efficient way of expanding their products or their business, but we will see what happens with JD.com, because even if they don't expand, or if they do expand, their homegrown business in China is still growing. It's still going to be effective. They control the electronics and home appliances sector hands down. That's where you can kind of see a lot of eventual growth going into the future, as people still want more electronics and home appliances. As the real estate market eventually will come back, people will still buy electronics eventually. That will come back even faster. So JD.com is a solid company, still growing, 14%, 14 to 60% free cash flow yield. If you compare that to bonds are at like a 4 to 5%, the 10-year. So what are we talking about? You're getting you can get a 14% cash flow yield, or you can get a 4 to 5% if you're thinking about bonds or something very safe. But when I put conservative numbers in the DCF model for JD.com, it's astonishing what I come up with, because it just shows you how cheap the company is priced at. I'm using free cash flow as the metric. I'm projecting 5 years, 6% growth. They just grew their free cash flow by 14%. I'm only going to put 6%. They're reducing their share count by 2%, as we're seeing they're buying back shares. And I'm giving a price ratio of just 10. Discount rate at 10. This is a future stock price at $77, a fair value of 48. And I gave you reasonable projections and estimates that I believe that JD can get easily in the next 5 years. And even if you want to project longer, 10 years, I still think it's an amazing investment. And the stock price will recover. I don't know when, but it will recover once probably the issues of China and Taiwan kind of roll over, or whatever happens. Who cares? They're buying back shares, they're giving us a dividend. We are willing to wait for the stock price to recover. Guys, what do you think about this video? Like it and subscribe to my channel.